Okay, let us pray. Thank you, Lord, for today. Thank you for the gift of life. Thank you for bringing us all together for this good mission. We ask you, Lord, for your blessings, for your guidance, and even, Lord, may the end of the day we gain as TPM members, Lord. May you bless our trainers, even as they give us the knowledge. We thank you, and we shall not cease to praise your holy name at the end of the day. We pray this, trusting and believing in your mighty name. Amen.
Amen. Thank you, Janet. I have seen Regina. If you can, Regina, say hi. Regina, can you say hi? Okay, maybe as she tries to sort her technical issues, we can just start.
I can say something for Regina.
Okay.
She said she'll be in a meeting, but she will join. She will join. After I'll present first, and then she'll join.
All right, all right. So Stephen will be the one starting.
Yes, yes.
All right. Okay, thank you very much, members, for joining. I am happy that we have joined in our numbers. We still expect others to join us as we go along. Remember, this training is supposed to last for the next 3 hours. That is from 2 to around 5 p.m. If perhaps you are able to see the topic that we are going to be trained on this afternoon is the Finance Act. The Finance Act, debunking the impacts of it in the tourism sector. Now, members have asked that they train us to unmute their video so that we can be able to see who is training us. So Stephen, if that is okay, you can let us see your face as you do the training. So this is the last CPD of the year. We plan to have 3 CPDs, CPD trainings. So we've had one in around February or March in Nairobi. We had the second one in Mombasa for those who joined. And then we are now having this last one, this December. And we decided to make it online so that all our members who've not been able to join the physical one can have an opportunity to join this particular one. So I'm not going to spend so much time on this. Our committee members will join, our chairman will join, I'm hoping, and then they'll find us along the way. So I wanted to allow now our members to take over the session, not our members, but our trainers, sorry. And as Stephen has indicated, is the one to start us off. So we are going to allow him to start us off, and then Regina will pick up when her time comes. So Stephen, the floor is yours. Thank you, members.
Oh, thank you. Thank you. You just confirmed that you can hear me. So I think it's time to start. So first, I'd request that we mute if we are not, if you're not talking, maybe you mute so that we have easy time training. First, I'd like to introduce myself. My name is Stephen Otieno, currently working for Kenya Tourism Federation. And Kenya Tourism Federation is the apex body, or we always say the umbrella body of the tourism private sector. We have various associations like hoteliers, KATO. KATO is Kenya Association of Tour Operators. We have another association called Kenya Association of Travel Agents, registered with us, registered with KTF. So that is who we are in the industry. We are not public. Most people assume that when the name starts with Kenya, then we are public. We are private. About the presentation, the Finance Act is quite big. It is a 60-page document, and because we were debunking it based on things that are relevant to the tourism industry, so we agreed with my fellow trainer called Regina, that we will only touch on aspects that are important to the tourism industry and associations, businesses, and professionals. So in my case, I'm going to handle the Income Act, VAT, and the Employment Act. And then my colleague will handle Corporation Tax, Excise Duty Act, and the Tax Procedures Act. First, I want to share my presentation. I don't know if I can share my screen. Let me see. Host, maybe you allow. It's telling me the host disabled attendee screen sharing. I would like to share my screen, please.
Are you
Hello.
on your end?
Yeah,
Yes,
I'm trying to share my screen so that you can see the presentation as I continue.
what are you being that the host is?
The host is it's TPA.
Yes.
Can't remember the name. I'm trying to share my screen, but it's telling me host disabled attendee screen sharing.
Okay. Okay. Let me try and sort that out.
Okay. All right.
Just a minute, I'm trying to change the settings.
Okay. So as she tries to make these changes, maybe I can just continue because the Finance Act is quite comprehensive and we don't need to waste any minute. So I'll start by saying what is Finance Act, by defining what Finance Act is. What is Finance Act? What is it all about? Of course, we've heard about it, and most of the time we talk about the housing levy and a few things that we get to know. But now, when we get deep into it, what is it and how does it affect the tourism industry? And based on the information I was given, we are tackling it from the point of looking at how it affects the business, it affects individuals and the industry, individual, professional, tourism professionals, and the industry as a whole. Let me just try to share it once again. Host still, I can't share the screen. So the Finance Act was first signed into law by the President on 26th June. On 26th June 2023 by the President. It was gazetted on 27th June, and the implementation is not fully done. Some aspects of it have been implemented, and others are continuing to be implemented. This act goes down in history as the fastest finance bill to be assented by the President. The act imposes different tax changes geared towards expanding the tax base and raising revenue to meet government needs in Kenya. The act introduces fundamental changes to Kenya's tax and social contribution regime. Changes in the act have been taking effect over time. The first changes were implemented on 1st July 2023. Others were implemented on 1st September 2023. And some are going to be implemented on 1st January 2024. So it's not fully implemented as much as we are talking about it. Some have been implemented, some are continuing to be implemented. Okay, now let me try and share my screen. I am able to. Can you see my screen? Please confirm.
Yes. Yes.
Yes, please.
Okay. So, okay. So that is, so this is where we are. Okay. So I think I've addressed the first slide. I'll start by income tax. So Income Tax Act involves legal changes or effects in form of direct taxes that are imposed on income derived from businesses, employment, dividends, rent, pensions, and interests, among others. So the income tax itself is it's quite comprehensive, but this is the Income Tax Act, and I'm just addressing the changes that were made in the Finance Act 2023. Income Tax Act amendments to the taxation of the employment income. Employment income is the proceeds that you paid as an employee for work done. It's a form of remuneration. So amounts received by an employee as payment of traveling allowance. This is the first change. Amount received by an employee as payment of traveling allowance to perform official duties has been excluded from taxation as gains from employment, where such amounts are based on the standard mileage rate approved by the AA, Automobile Association of Kenya. This means when, let's say you have a car and you're being sent for official duties, there are specific rates that you should be paid by your company based on the mileage as defined by the AA Association. For more information about these mileage payments, you can maybe consult with the AA website. But if your company opts to pay more than what is provided by the AA Association, then this one, the extra amount is taxed. It's taxed, and it's taxed on the employee who is being paid this particular amount. Another change that the Finance Act introduces is club entrance and subscription fees paid by employer on behalf of the employee shall be treated as a benefit and taxed on the employee. The expenditure will be allowed against the employer's income. So we're not talking about the dancing clubs here. These are maybe the special clubs in the industry, or maybe a club meant for organizations, or just employees have formed their own particular club that for specific benefits that they want. So if your employer pays a subscription fees to any of these clubs, they they are treated as benefits. That is the new change brought in by the Finance Act, and they are taxed on the employee, not the employer. Next is the Finance Act under the Income Act clarifies that the market value of a yes.
Sorry, we are still stuck at the slide is still stuck at slide 1. What we can see is slide 1. Have you moved? You can move us there.
Really? Oh, I'm actually at slide 3. I don't know why. Let me just confirm.
Okay, that's okay.
Oh, okay. Let me keep it that way. Yeah, so that's, yeah, this is where I am right now. Can you see it? The fourth slide?
Yes.
Okay, thank you. Now, these are what I'm talking about. The third change is states that clarifies the act clarifies that the market value of a share for purposes of taxation as a benefit shall be when the employee exercises the option as opposed to the date the option is granted. So this is about the shares, the company shares. The market value of a share, when you buy a share maybe from any company, in this case we're talking about tourism, is looked at in terms of as at the time that you buy that share, not on the date that the option is granted. Another change is it allows for deferment of taxation of the benefit of shares allocated to an employee, where the employee is offered company shares in lieu of cash emoluments, where you where you paid dividends in cash, then you are allowed for deferment of the taxation. Income Tax Act, another notable change here, I'm on slide 5, taxation of repatriated income for non-residents. And the change states that it introduces the taxation of repatriated income for non-residents with a permanent establishment in Kenya at a rate of 15% and reduce their corporate income tax rate to 30% from 37.5%. So repatriated income, I'll start by defining repatriated income as income that your business earns from overseas. Overseas could be Uganda. You don't have to think about America and UK. Overseas could be Uganda, and Tanzania is also overseas. So in case you have a business and you have maybe a branch of your company in Tanzania or Uganda and a branch of your company in Kenya, and you are a non-resident, meaning you operate this business maybe from Uganda, you're not in Kenya. If you've made profit and you want to send this particular money back home, maybe to Kenya, this money will be taxed at 15%. And on the condition that you have a permanent establishment in Kenya, that means you have your offices in Kenya. And then the government reduced their corporate income tax. For such companies, your corporate income tax is reduced from 37.5% to 30% currently. So the profits that you will earn in your company in Kenya will be then taxed at 30%. It was initially 37.5%. So somehow this is still more expensive for the business, considering that all the income from overseas will be taxed at that rate, and then your income here will be taxed at 30%. Although yes, it is reduced from 37 to 30. But if you look at the real math, or if you take the real values and calculate, I wanted to calculate, I didn't have enough time to show the real examples. You realize that the tax is higher, and this one has a very big impact on business in terms of increasing the cost of doing business. This one is effective from January 2024. Income tax, there's turnover tax. The turnover tax is lowered the upper threshold for turnover tax to 25 million from the previous 50 million, and rate increased to 3% from the previous 1%. So I'll define turnover tax. Turnover tax is tax charged on business whose gross turnover. So gross turnover is like your total earnings before deductions of interest, taxes, amortization, depreciation, and so on. So turnover tax is charged on business whose overall revenue is above 1 million, but does not exceed or is not expected to exceed 25 million. Initially, this particular change was capped at 50 million. I mean, the tax charged on businesses that earn above 1 million, but this tax was charged on businesses that earn above 1 million, but did not exceed or were not expected to exceed 50 million. But now it is reduced to 25 million, which means the government is likely to get more businesses into this tax bracket. And this one, the government is doing this based on the fact that it wants to increase its tax base, and it wants to get more taxes from such businesses. Income tax. There's a new income tax also introduced under cryptocurrencies. It is derived from the government has introduced tax on the income derived from the transfer or exchange of digital assets. Digital assets are like the cryptocurrencies. You've heard of the Bitcoin, okay? So all proceeds or all the earnings that you get from maybe transacting with Bitcoins or other forms of digital currencies there will be a 3% tax. This one became effective from 1st September 2023. Income Tax Act, interest on mortgages. So individuals can claim mortgage interest expense to a maximum of 300,000 per year incurred on money borrowed from a cooperative society. So underline money borrowed from a cooperative society, not from a bank or any other institution. Actually, this is a relief for the people who are into mortgage or businesses that are into mortgage. So mortgage is a type of loan or agreement used to purchase or maintain a home, a plot of land, or a real estate in which the lender takes the collateral in case of default in repayment. So when you take a mortgage right now, you can claim a mortgage interest. You can claim a mortgage interest up to a maximum of 300,000 per year. And when you take a mortgage, you should always note that the collateral is the product that you, not really a product, but any assets that you promise, you make a promise on it that the government, or not the government, sorry, that the lender may take it in case you default payment. That is what a collateral is. So a collateral used in this case, in the mortgage case, I mean, is always it is almost always as the property one is purchasing with the loan. What do I mean? If I'm taking a mortgage to buy a house and I pay this house I continue to pay my premiums up to a certain point, and then all of a sudden I'm unable to pay, the lender may come and take your house. I mean, they may claim it back based on the agreement. So when you engage in mortgages, it's important to understand the agreements and so on. But with respect to this act, it allows for interest of up to a maximum of 300,000. Income tax, filing of income tax returns. Any expenditure or loss shall not be deductible. Shall not be deductible if the invoices of the transactions are not generated from ETIMS. ETIMS is electronic tax invoicing management. People who are into mostly products know the ETIMS aspect. And if you are, ETIMS mostly affect companies that pay VAT. So if you know you need to pay VAT and you do this transaction out of ETIMS, then any expenditures or losses incurred will not be deductible if the invoices of the transactions are not generated from meetings. And that's mainly this particular change just directs, actually just a kind of encourages many people or businesses that pay VAT to make sure that they do it through ETIMS. Income tax, introducing withholding tax. So the government is introducing withholding tax on some services. And first, before I go to the introduction of withholding tax, I would like to define withholding tax. Withholding tax is income tax that is withheld from an employee's wages and paid directly to the government by the employer. So it's just from its name, it's a tax that is withheld. For instance, if I'm the employer and there's a service that maybe I've through consultancy or something that someone has provided, and this person is supposed to pay withholding tax, I withhold the tax. I pay them less the tax. So once I withhold it, I'm the one, as the owner of the business or the employer, to pay this tax to the government. So Income Tax Act introduces withholding tax on sales promotion, marketing and advertising services for residents at 5%, digital content monetization to residents at 5% and at 20% to non-residents, rental income received on behalf of the owner of a premise. So rental income received on behalf of the owner, this means that maybe houses that are managed mostly by agents. Okay, so withholding tax is hereby introduced on rental income received on behalf of the owner of the premises, provided that only a person appointed by the commissioner in writing shall deduct tax with regard to rental income. And if you are liable of paying withholding tax, once deducted, then you only have 5 working days to remit the tax. So we are still on income tax, additional items exempted from tax. So there are exemptions. First, royalties and interest paid to non-resident person by a company undertaking the manufacture of human vaccines. This one is mostly concerned with the health organizations. Investment income from a post-retirement medical fund, whether or not the fund is part of a retirement benefit scheme. Income earned by a non-resident. So a non-resident is someone who does not live in Kenya. This person may be a citizen or not, but they do not live in Kenya. But maybe they do some transactions here and there. So income earned by a non-resident contractor, subcontractor, consultant, or employee involved in the implementation of a project financed through 100% grant 100% grant under an agreement between the government and the development partner to the extent provided for in the agreement. So at that point, I'd like to say that some of these changes made are also related to some other documents or some other agreements or acts that someone may need to know before they proceed. That is why it is also important to consult with a tax expert or a finance expert. Okay, I continue. Another additional item is gains on transfer. This is another exemption. Gains on transfer of property within a special economic zone enterprise. You can Google like special economic zones enterprises to know what they are. Developer and operator. Another exemption are royalties, interest, management fees, professional fees, training fees, consultancy fee, agency or contractual fees paid by a special economic zone developer, operator, or enterprise in the first 10 years. So in the first 10 years is quite important. So after 10 years, these people may need to pay income tax. Income Tax Act, pay as you earn. So this one is also very important to the tourism ministry. Industry, tourism industry and tourism stakeholders. On payee, there are the new individual tax rates of 32.5% and 35% on employment income above 6 million per annum. And I have attached an example here. I'm not sure that it's clear. But for instance, someone who's earning 115,000, they have a mortgage interest of 15,000. They contribute for pension 5,000. Their taxable pay is 95,000. So how do we get to 95,000? It's 115,000 minus 15,000 minus 5,000, and then we get taxable pay. This is the amount that is taxable. This is the amount that we use when computing tax. So the first 24,000 of this individual is taxed at 10%. 24,000 is currently the minimum wage rate for Kenya. The first 24,000 is taxed at 10%. The next 8,333 is taxed at 25%. And then there is the next 467,000 should be taxed at 30%. So what we do here is we add 24,000 plus 8,333, and we get 32,333. You deduct it from the taxable income, taxable pay, and then you tax it at 30%, which gives us 18,800. Okay. So after that, we deduct monthly personal relief. Total tax, as you can see, is 2,400, 2083.25 plus 18,800. And then you get the total tax as 23,283.25. Monthly personal relief is 2,400 for everyone, regardless of their salary range. And then there used to be insurance relief, but nowadays it's not there. So the taxable pay is 20,008 tax payable. Sorry, the tax payable now, as you can see, is 20,883.25. I can explain this more maybe again if someone doesn't understand, and I think you'll raise that during the Q&A session. Income tax reviews on the rate of advanced tax. Advanced tax is charged on vans. Now, this one is really important to the tourism industry. It's charged on vans, pickup trucks, prime movers, trailers, lorries, to 2,500 per ton of load capacity per year, or 5,000, or 5,000, whichever is high. So, if someone based on the tons, they is supposed to pay some like maybe 8,000, then they'll have to pay that 8,000, or maybe 7,500. They'll have to pay that 7,500, or 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 5,000 per year, whichever is higher. There are also other vehicles affected include salons, station wagons, minibuses, buses and coaches to 100 per passenger, 100 to 100 shillings per passenger capacity per month, or 5,000 per year, or 5,000 per year, whichever is higher. So I'd like to explain the first one. I didn't explain it well. So when, for instance, let's say that the relevant authority has calculated your tons, and it comes to 7,500 per ton of load capacity per year. If you have 7,500 and then you're also supposed to pay 5,000 per year, you'll pay the one that is higher. That means you may not be required to pay something that is below 5,000. Income Tax Act, digital monetization. This one is also important to the tourism industry, given that nowadays there are various people, individuals creating content for the tourism industry, just to create awareness about the country, to show the beautiful landscapes, the magical Kenya, and so on. So creating this content, this digital tax, there is digital service tax. It's called DST. Digital content monetization will be subject to withholding tax at a rate of 5% for residents and 20% for non-residents. Residents are people who reside in Kenya, and non-residents are people who transact. Yes, their transactions, they transact maybe with businesses that are in Kenya, but they don't live in Kenya, or they do not have any permanent establishment in Kenya. So they'll be required to pay 5%, that is for the residents, and 20% of their income for the non-residents. And for this tax, if you are working with a company, let's say you're working with YouTube, and then it is upon YouTube to make sure that they pay these particular taxes while remitting the money to your account. Now that is all about the income tax. Now we go to value added tax. VAT is mostly, I don't see how it really affects the tourism as much, but the changes that are here include VAT on petroleum products will be at the rate of 16%. There was a proposal that it be reduced to 8%, but now it is at 16%. There's also VAT that is removed on LPG, the cooking gas. So it is zero rated for VAT currently. So the expectation is that the price of the cooking gas will reduce. There's also the Act clarifies that suppliers of imported digital services are required to register for VAT, whether or not it has made taxable supplies or expect to make taxable supplies that meet the 5 million annual threshold. So there's always that requirement that businesses that make supplies of 5 million and above are supposed to register for VAT. But now there's a clarification that is made, a change that is made in the Finance Act under value added tax, that suppliers that import digital services should register for VAT, whether or not it has made taxable supplies or expects to make taxable supplies that meet the 5 million annual threshold. Value added tax exempt, these are now exemptions. One is all aircraft and their parts, local purchases of plant and machinery of Chapter 84 and Chapter 85 by manufacturers of pharmaceutical products. So this one mainly is also affects the health sector. Taxable supplies for companies under a SOFA incorporated for the purposes of undertaking other manufacturing activities, including refining, and whose capital investment is at least 10 billion. Also, not so relevant to the tourism industry, but just important for our own knowledge. Taxable supplies made to or by a school feeding program recognized by the CS responsible for matters related to education. So this particular food that is used to feed learners in schools are exempted from VAT. Value-added tax also exempt the exportation of taxable services, liquefied petroleum, LPG gas, electric bicycles, solar and lithium-ion batteries. Maybe electric bicycles are important because they are used in the tourism industry, mostly in various destinations. People use them. Tour organizations, companies buy them for clients. The rest, as you can see, mostly they do not relate directly to tourism. Maybe they may, in fact, like tea and coffee, may affect the tourism industry indirectly, because tea and coffee is used in hotels and various joints and tour destinations. So the Employment Act of 2007, this one is one of the most talked about change that has been made in the Finance Act. The housing levy of 1.5% of employees' gross salary is payable by both employers and employees. This means that an employee will contribute 1.5% to the Housing Development Fund, and another 1.5% will be contributed by the employer. So what this means is if you earn maybe 50,000, then 1.5%, that is 50, that is if your gross salary is 50,000. So your gross salary, it means your basic salary plus all the benefits. 1.5% of that is deducted from your salary, and then the other 1.5% is paid by your employer. The gross salary here means the basic pay before taxes and benefits. I've just said that. Employers are required to remit the levy to the KRA. Yeah, this is another responsibility given to the employer. It is upon the employer to ensure that the housing levy is paid. So as an employee, what you'd wait for is your salary after those deductions. If your employer didn't make those deductions, it would be a fault on their case, but it is very important that you follow up and ensure that you pay them, because the arrears will be in your name. Also, failure to contribute the levy. If you don't pay the housing levy, then there's a penalty of 2% that is charged on the unpaid funds every month of non-compliance. So, for instance, if you fail to pay housing levy for 2 months and yet you received your salary normally, then 2% of the gross salary will be charged, and it accumulates as time goes. Overall impacts on tourism, that is all about the VAT and Employment Act. Now I'm going to look at the impacts. Overall impacts on tourism, hospitality, and travel businesses and professionals. First, it's high cost of doing business. Actually, if you want to start business, you have to think about all these taxes. There has been complaints that the taxes, maybe they are really leading to unstable business environment, not just in the tourism industry, but also in other sectors. But again, I'm not talking about just tourism industry. I'm talking about tourism, hospitality, and travel. So every time you hear me talk about THT, I mean tourism, hospitality, and travel. That's how we always talk about them for inclusivity. There are also reduced revenue for hotels. Another impact is reduced revenue for hotels and other tourism infrastructure. As you can see, as you have seen, the expenses in terms of taxes and other regulatory amounts that the government require businesses to pay are somehow increasing. And this one reduces the revenues or increases the expenses. It may increase the expenses to the extent that a business may not be able to run, but again, this one is a factor of management. Or it may just increase expenses such that it reduces your revenues, and again, that one minimizes your profits. Another impact is that it may lead to a possible decline or minimal increase in domestic and international tourists. Increase in taxes generally, even if we go out of the Finance Act, you realize that most people are trying to cut their spending. So as they cut their spending, they may not go for maybe tourism activities. Recently, you saw it when the government, during Jamhuri Day, when the government permitted all domestic tourists to visit KWS parks for free, and people, they are saying that is a chance they would get because they would not like to pay. So if there is payment, then most people, if the taxes are high and the cost of living is high, then this one also has both direct and indirect impact on the number of visitors per given period, and mostly it affects domestic and I believe also international tourists. It affects the inbound travel. So another impact is robust tax system that will hurt the competition in the industry. Mostly, there's something in commerce that is called economies of scale. So economies of scale means businesses that make maybe relatively higher profits may be able to be able to control the market such that they can set lower prices, make minimal profits, but if they are able to make more sales, then their profit will just they will still be able to run their businesses. But small organizations may not benefit from economies of scale because if they reduce the prices, maybe with the aim of attracting more clients, they may not be able to achieve their targets or to meet their expenses. So the tax system affects the competition, especially for the small and upcoming business, startups. Another impact is the act hinders the ease of tourism, travel, and hospitality business startups. I just mentioned it. Starting a business, someone may need to rethink based on the newly introduced taxes. But for the impact, it's open. Anyone can add what they think it's important, and we can add it here. So based on this act, what does the future have for the industry, for the tourism professionals, learners, and so on? As you can see, these are
Members, I think Mr. Stephen Otieno has experienced a challenge. Please be calm as we try and resolve it. As we wait for Mr. Stephen to rejoin, is Regina in? Regina, kindly unmute and say hi so that you will know you are in. Regina?
Yes, I'm in. Yes, I'm
okay.
in.
Yes. I could not, but Mr. Stephen was left with probably one slide. So
yes.
If it's going to take time, maybe we can start you off so that if there is anything that he was to finish, he can finish at the end. Is that okay?
That's okay.
So if that is okay, then we'll allow you to pick up and kindly unmute your video so that we can see you.
Okay. So I proceed?
Yes, kindly proceed.
Sorry, you caught me unawares. I was waiting for him to really finish, so apologies for that. I hope you can be able to see me properly and be able to hear me. So if you can do that, you can say a yes on the chat so that I'm able to see. I'd say Stephen has really done a good job in sharing and on the Finance Act. I think he has really done the biggest portion of the Finance Act, and he has explained most of the items, especially the items that touch the tourism industry and the hospitality industry. So for me, I'll pick it up from there, and then possibly he can come over and finalize his slide on the effects of the tourism industry, and possibly also the question and answer we can be able to answer together. So with that, I'm going to share just a few issues. And of course, I'm going to add some recent KRA or updates. I feel it's important beyond the Finance Act. There are some changes that are happening in the KRA platform and on the taxes that you need to understand and to prepare. So I'll dive into emerging issues. I'll combine some emerging issues plus the Finance Act some portions that I felt were important that he did not mention. So the first thing that I want to mention is the onboarding of non-VAT taxpayers on eTIMS. And I felt this is a very major change that is happening in January 2024. This was one of the portions for the Finance Act when it is said that is going to disallow all the purchases that are not eTIMS compliant. So this is a very huge change. And I would mention that when eTIMS was being incorporated last year in December, a time like that, now the teams that was replacing the old ETR was in place. And we had a lot of changes when it comes to VAT. So how VAT has evolved over time is that there was a time that we used to do the manual VAT reports. Then ETR came in. Then the teams, which was introduced in December last year, was bringing a change in that ETR was able to transmit data to KRA on real-time basis. So that was the difference. But later in the year, eTIMS was introduced, meaning that now KRA want to see all the sales that are being done in Kenya on real-time basis. So this is something that has a huge impact when it comes to compliance, and meaning that our company shall be pushed in compliance.
Jabus, I wanted to confirm whether we have lost Miss Regina.
Mr. Kibe, Regina is back, but she has not unmuted herself. Regina, kindly unmute yourself. Unmute, and then I think you can also mute the video. It could be affecting maybe the quality. You can also mute the video, kindly.
Okay, it's okay. So sorry for that. I had a problem with electricity, but I'm back.
Go ahead, Regina.
Okay, thank you so much for that. Apologies for that. So the difference, I was explaining the difference between teams and eTIMS is that when I come to your hotel and order for food, and remember when you come to the hotel, it has so many levies. There's catering levy. There are so many levies that when you're doing your business, you have to be aware of. And VAT is one of the taxes that you should pay. So when I come to your organization or to your hotel, and I hope you can see my recording, my notes.
Unfortunately, no.
Okay, sorry. Let me reshare the screen again. So can you be able to see them?
Yes, confirmed. We can see the screen.
Okay. So when I come to your hotel and order for food, and I buy food possibly worth 1,000 or 2,000, previously you could go to the eatings machine and do 3,000, and then you get your eatings or the ETR recording. But with the eatings is operating like a point of sale, that you have to key in the stocks, you have to key in the food. So you have to describe that Regina, the 2,000 Regina ate, she ate nyama choma and ugali and kachubali and a soda. Everything has to be there. Then the cost is 2,000. So KRA is no longer interested to see the amount of sales in a day. They also want to see what did you sell. So that is the difference between the teams and the eatings. And the push is that every company in Kenya, whether it's a business name or is a small organization or a small business, has to be eatings compliant. And for this is a very huge initiative that is coming in January. And it has its own challenges, but what I would want to say is that first of all, eTeams is free of charge. So they have made it free of charge. It's not the other times that you used to buy. So this is something that is a software that you can load at the comfort of your place. Business below the VAT threshold will use it under exempt. So previously, for you to have eTeams, you have to be VAT registered. But now they have said that every business has to be eTeams compliant, meaning that even the businesses that are below the threshold has to use it, and they have to do it under exempt. It's going to also be enforced by the Revenue Service Assistance. So KRA in September released a number of 1,400 people who are moving to our hotels. And actually, I can attest to that. The hotel industry is one of the places where that the revenue service assistants are really moving. So they are coming to your hotel, they are posting like customers, they buy, they eat, you don't give them eTeams receipt, and they write you a letter to go to KRA. So there's 1,400 people that are moving around. And one of the main jobs to do in January is to make sure that when they come to your organization, you'll be having eTeams. So that will be one of the work that they're going to do. It will also push turnover tax filing. Stephen mentioned about turnover, and I really want to mention something about it, because it's also something that is going to be imposed in a very, very big way. I'm going to mention in the next slide. And then some companies have started with this compliance. I don't know if some of you have started with this compliance of being eTeams compliance, regardless of the magnitude of business that you're doing. One of our companies around the areas, and I'll mention Farmers Choice, they have given letters to their farmers. These are farmers that are selling pigs to the company. And they are telling them, for you to supply us pigs, and these are farmers, you have to be eTeams. You have to give us an eTeams invoice. So you can imagine the magnitude of this compliance that is coming in January. And they are telling them, come January, everything that you're going to bring here should be eTeams compliant. So even you, as the organization, if you're running a hotel, you have to have eTeams. If you're buying your purchases, whether they are fuel, whether they are groceries from the market, they have to be eTeams compliant for you to be able to acknowledge them as purchases. So this is something very, very huge, and it's something that even in your places that you should be able to organize how you do business and be able to be compliant. And KRA, I would say it has been very radical. This year they have done a lot of radical issues that when they send something like this, sometimes would think is a joke, and the next point, all the pins have been deactivated. So this year they have deactivated pins 3 times. So they have deactivated all the pins that are not VAT compliant, yet they have VAT obligation. That was done around June. The other time they have done VAT irregularities, they have blocked, and they do it radically. So it also means that they are under pressure to really make sure that these things work out. So for your business to be able to work out, I think ITIM's compliance is key. The challenges that I foresee, it is complex to use, is very complex to use, and requires a lot of trainings, which also KRA has done a lot of training. For us as an organization, we do a lot of tax training. It's also a platform to make sure that you're able to use it properly. Not every business has a laptop or a phone to handle the ITIMs. Of course, for you to download it, you have to download it on the laptop or on a phone that is reliable. And you can imagine a farmer who is farming, and because they are supplying those farm products to your hotel, you tell them you have to be ITIMS compliant. So for them to be ITIMS compliant, they have to have ITIMS. So for it to really work out, it has to be crafted in a way that even that farmer can be able to access it, or in a cyber or something, so that they can be able to have that invoice, so that they can be able to do the supply. Then the other challenges that I foresee, taxpayers' mindset. You know, sometimes when something like this, and this is something that we've talked about for about 6 months, since the finance bill came in and since this rule was done, and the circular, KRA released a circular about 2 weeks ago saying that they are going to really implement this in January. So what do we say? That I'll be doing my business in cash. So when I'm able to do business in cash, then I cannot do ITIMs. But I also pose a question: how much business can you do in cash? So what about the control of the cash handling in your organization? What about the bookkeeping? How will you go about them? And the whole issue, what about the revenue service officers that are moving and coming to look at your books? So there's a lot of issues when it comes to ITIMs, but it's also a discussion that we can discuss in our companies or in our areas and see how you can become compliant. So the other part is that is also huge. This also was released this month, is the simplification of VAT return filing process. Also, I would mention that ITIMs or TIMS was a game changer when it comes to tax compliance. So KRA have said that come January, the VAT return will be pre-filed with the tax information available at KRA. So it means because the ITIMs, you're operating your sales on ITIMs, and you're getting your purchases from ITIMs compliant suppliers, that at the end of the month, before you do the filing, that we do VAT self-assessment. The KRA will have your data of sales and purchases. So for you, it will just be pre-confirming. You just be confirming the information available with them. And you can imagine such a directive being happening in January, tabled with that every business has to be ITIMS compliant. So KRA has been taking taxpayers through the training of how to do the simplified VAT return filing since this week. So they are doing a lot of training. You can also plug in as tourism authority. You can plug into KRA. They are doing a lot of online webinars showing you how to go about this. They are saying there is a way you have to download the CSV file from their system. You pre-confirm the details and then you submit. So this means that all the purchases you're having, that even the person that you're receiving the invoice from has to have your PIN and indicate that they sold it to you. So there's a lot, there's a lot that is happening when it comes to VAT and when it comes to eating. So this is something that I would want you to really take in on, and you can have that discussion within your circles, within your business, and see how you're supposed to be compliant. So the unified pay bill number. So you can write me on the chat if you're together with me to help me up to make sure that I'm on, that I stay on. So should we continue? Okay. So I had Stephen mention something about the fridge benefit. So I'll not mention that. So also something to note, if a company have some investment when it comes to monthly to rental, the residential property, effective January, the rate will be reduced from 10% to 7.5%. Of course, to make sure that every rental business is right there. The other thing that I should mention, I said I'll mention again about the turnover tax. I felt it was important to note this. So if your business is not at the threshold of VAT, that is 5 million. Turnover tax is the rate of 1 million. The minimum is 1 million for you to be there. And for the recent period, like 2-3 months, I've seen the revenue service assistant, the KRA people that are moving up and down. Mostly their biggest target is the small businesses, the small hotels, the small businesses that are doing business. So when they come to your organization, the first thing they want to see, are you ETIMS compliant? So if you're not ETIMS compliant and you tell them I'm not registered for VAT, they want to look at your turnovers. And some of you have seen in the recent time, even the pay bill numbers on the walls, we have removed them and the till numbers, because that is what they are using to make sure that they want to see how much sales you're making, so that they make sure that you're doing turnover tax. So in the previous times, turnover tax was not really pushed or was not really done. But with this government and with the KRA officers moving up and down, the first thing they are doing is the registration of TOT. So when they come to your business and you're not on the threshold, but you're doing 1 million turnover per year. So 1 million turnover per year is about less than 100,000 per month. So the moment, and this is a small hotel. If you're doing 5,000, 7,000 in a day, then you should be at the turnover tax. So the first thing they come to check, they check what are your sales, they check the number of the employees that you're having, do you have pay as you earn, and they help you do registrations. So turnover tax will be something, come January, will be something you either be VAT or turnover, but you not be turnover tax, but you not be paying, you have to pay taxes when it comes to business. So some of this was mentioned. What I can also mention is the clearance at the passengers terminals. I mentioned this because the tourism industry are some of the people who travel the most. So when you're traveling, you love traveling and you go to Dubai and buy something, be sure that at the point of entry, if whatever you have bought exceeds 500 USD, then there are taxes that you will be paying. So this is also a controversy that you have seen. We have seen people, you buying a phone as a gift to your mother or to your father, and you're being charged some taxes at the port. So you have to really understand that that is something that is being used. Stephen mentioned taxes on repatriation, so I'll not mention that. Also, there was the rates of advance tax. Also, I had him talk about that on the vehicles, the commercial vehicles within the company. So let me talk about the Tax Procedures Act. So there were also some changes. The first one was on amnesty of interest, penalties, and fines, and this is huge. I'm going to mention in the next slide in a big way. But also withholding VAT or withholding tax, you're supposed to remit it within 5 working days. So if you are withholding tax agent and you do VAT withholding, or you just do withholding tax, for if I come to your organization as a professional, as a tax consultant, and you do the 5% withholding, you're supposed to remit that money within 5 working days. So this was effected. So on the 60th day, there are penalties and interest that are accruing to that. So this has been effected already. Also, the settlement of tax disputes out of court or tribunal. So when we do tax, when we go to the tax tribunal, you are supposed to be given a determination within 90 days. And those 90 days are not really enough. And next time, I would request Mr. Kibe and the rest that you allow me to train your members on the audit, tax audit procedures, how KRA comes to your organization, what are they looking for when they are coming, how do they audit your books, what are the tax dispute resolution mechanism. I can talk to you about the tribunal, about the ADR, about the objection process, every process, and how to conduct yourself during the audit period. That's mostly what we do, so we can organize that. It's very important for you to understand, especially now that KRA is really moving up and down, trying to audit and trying to collect as much taxes as possible. So it's very important for you to understand. And I know some of you have been sent letters of audit. So how do you respond to those letters? What is when KRA is asking for something, what are they looking for? That whole process is very important for you to understand. So pre-assessment, assessment period, after the assessment, the whole process. So the days has been added from 90 days to 120 days, of course, to make sure that you can get a hearing. It's very important. Then there is another thing, commissioner discretion to waive penalties and interest scrapped off. I felt it was important to mention that. So previously, if you were applying for the waiver, and I'm going to talk about the waiver of interest and penalties in the next slide. So previously, when you're applying for waiver, the commissioner had the discretion to grant you the waiver depending on the reason that you have given. So he will give you 50%, 60%, 70%, depending on the reasons that you have given. But now, during this Finance Act, the commissioner doesn't have that advantage anymore. What does that mean? That after the amnesty season is over, which this amnesty is covering from the period up to December 2022, when the amnesty period is over, then the commissioner will not be able to grant you waivers of penalties. Meaning that for me, what I foresee is that KRA is trying to do reconciliations of their data to make sure that when they now audit our companies, then they can fully recover the taxes due. So this is a danger in one side, but also for us to take advantage of the amnesty, and we'll talk about the amnesty. The affordable housing levy, Stephen mentioned about it, but last month the court found the housing levy opaque and said that it did not follow the legal framework. So this is something that we're going to see what unfolds. The government said that we have to continue. The courts are saying we don't continue. The employer is standing at the middle saying they are so expensive. So I also foresee that in the next Finance Act 2024, there will be a bit of changes when it comes to affordable housing levy, of course, making sure that they can now follow the legal framework to make sure that that it can be endorsed properly. The biggest portion for the housing levy that did not have is the capping. No cap on the levy. That was too much for me, I think so. And I think in the next act, they can be able to do the capping. And of course, for Kenyans to also see the results of the housing. So we also see for now, the advice is to continue. So the employers who are biting the bullet and they are saying, I will not continue with it, but the advice is to continue with it. So the other portion that I want to mention is how to engage the revenue service assistants. These are KRA officers that are moving around our businesses. And you can tell me on the chat if you have encountered them coming to your premises. I would want to see if any one of you have encountered. For me, I've worked in the industry for about 10 years. And this is something that we have not seen in the longest. So KRA would take a portion to do audit in their offices without really coming to do the surveillance. But now we are having people who are moving, coming to our businesses to look at our books. So I thought it was important to tell you how to engage them. So when you encounter them, the first thing is for you to be sober and calm. And you can ask for their identification. Is very, very important. Of course, we know we are in Kenya. Some of the people might take advantage of the whole thing and they come in our offices to just make us panic for no good reason. So make sure that you can ask them for identification. You can go to KRA customer. When you go to the website, you can see their customer numbers you can call. It's very important for you to just verify. You can designate a contact person to talk to them. So most of the time when they come to you, what are they looking for? They are looking for what business do you do? Those are the questions they ask you. How many employees do you have? What are your sales? And of course, they are doing visual observations. So when they came to your shop, if it is your hotel, they saw the staff, they can even count them as they move around, they say, we saw 3 waiters, we saw a manager, we saw who. They can have that data as just observation. They can move around to just see what you're doing. Sometimes they will eat and not tell you, but the service, the revenue service assistants, when they're coming in uniform, they have a badge, they have identification, so they can identify themselves. So after that, they will request you for information. They can request you for your receipts. They will look at the till numbers if you're having them on the wall. They'll take the number, because the moment they ask you for audit, they will tell you in particular, we want to see this till number, we want to see this payable number, we want to see sales in this. So they will take count of anything they can be able to see. If there are books that they ask you for and you provide, they can do a simple sample. Even when they are there, they can look at your sales book and just see in a week how much you sold and be able to translate that to an average, possibly of a month or a year. So the other portion is to just to stay calm, cooperate. When they tell you to ask you questions, just answer as simple as you can be able to provide. Sometimes they ask you for documentation. It's not a must for you to provide the documentation. So you can tell them the documents, we can provide the document to your office on a later date. Or you can say, I don't have the document, the documents are with the auditor or with the accountant, and request for a later date to provide the information. Maintain privacy. I don't know, I also feel very important. If you feel you're not the right person to answer questions, you can bring that, the questions being answered as requested to the director or to a manager, so that the information given is the right information. You can address the issues quickly, very important. And record details. If you can have in your book, record the question they ask, how do you handle them, how many were they, who were they, it's very important. And if they pick anything, whether it is a receipt, record what they were able to pick, very, very important. And I say the reason that they are coming, they want to see if you're tax compliant. And their target point is especially people who are doing middle to micro businesses. So when they come to you and they find that you're not registered for VAT, you don't have pay as you earn, and you have staff, you are not on TOT, some of you don't even have business names. The business, you're just there, but you're operating. So they will make sure that you are registered. The first obligation is to make sure that they register as many people as possible for taxes. So they're going to register for pay as you earn. They're going to do TOT if you're at that level. They're going to do VAT if you're at that level. And of course, when you come to employment, housing levy comes in, NITA comes in, NHIF, NSSF, all that comes along the employee's part. And when they register you, at that point, they're very friendly. But after 2-3 months, this is the catch. After 2-3 months, they are going to come back again. So if you're not being able to follow what they told you, the registration they give you at that particular point, they can charge you for penalties. And mostly the penalty, they'll charge you 50,000, 100,000, 500,000, depending on the nature of the business. So penalties and fine. And that is something that you can even be taken to court. There's a debt and there's a legal enforcement unit in KRA. So the moment they find that they registered you, they gave you the instruction and you did not follow, you'll be given to the legal enforcement unit. So for them, they do fines, they do, and they can cascade it to go to the, it can be a legal issue. So after that, they are giving you a letter. If they look at the information that you've provided is sufficient, they'll just walk away. But if they find that the information that you've given is not sufficient, they are going to give you such a letter that I have posted here, and they're going to tell you, give us the information by which day that process, they can they can write you just a manual letter. So they'll just indicate your PIN and your date and everything. They just have those letters with them, and they can tell you a day like next week, bring your documents, and they can give you a list of something to come up with. So let me talk about the tax amnesty, and I'm hoping that we are able to take advantage of this. This was also released in the Finance Act, and it's something that is ongoing. So this is a move to make sure that all our tax ledgers are able to be cleaned up. So if you, when our tax regime was manual, we were doing manual records. Then we had another system that was called legacy system. Then we had iTax. Over that period, there were so many tax arrears, tax credits that were not incorporated properly. And I know some of you have issues with KRA, that you have a receipt. Every year they tell you that you did not pay it, but you have a receipt. And every year you have to write to them and give them the same receipt and tell them, I had paid, but you've not reconciled my ledger. But now with the tax amnesty, KRA is ready to reconcile all the ledger issues and make sure that whatever payment that you had done before that were not incorporated in the iTax portal, they can be able to incorporate it. Sorry for that. So they want to incorporate, to make sure that they clean up the issues. So I want to take you through the process a bit, because this is a process that you can be able to do it on your own. So you can be able to do it on your own for a few minutes. So this is also happening to your individual. If you have penalties, and as an individual, you can still enjoy this, or your company. So this is what you're supposed to do. So this amnesty is running up to June 2024. So I think at the moment we are having about now 6 months to go. So if you have principal amounts for the period 2022, from December 2022, you can do a payment plan for that period, pay them. The moment you pay, the amnesty is going to be automatic. So for the people who don't have the principal amount, they just have penalties and interest, what we are doing is that you go to the iTax portal and you create one shilling. You create an e-slip of 1 shilling. So if you have like five of them, you create one. Now what do I say? If you have an arrears for December 2022 of 50,000, you have for August 20,000, you have for March like 30,000. So you go to March, you create a e-slip of 1 shilling, then the other month 1 shilling, then the other month 1 shilling, and then you pay. The moment you pay, 24 hours, you find your ledger is totally clean. So those are the people that don't have the penalties, the principal amount. But for you who has the principal amount, this is the formula you have to use. So you have to go to your iTax portal and you apply. When you go to the debt enforcement, you can see my arrow. You can go to the debt enforcement and click there. Click the amnesty application. This is how the amnesty application looks like. So it will take you, when you click the amnesty, it's going to get you to this page. So this is the tax amnesty. You can choose down there. So you can see the amnesty, income tax amnesty. When you go down there, there will be the amnesties. So for this one, if you don't have any tax obligation, this is what is going to give you. So it will tell you don't have any tax obligation to apply for the amnesty. But if you have, it's going to show you the principal amounts that you're supposed to have to apply for the payment plan. So for my case here, you can see that the person has 182,000, 196,695. These are the principal amounts that they are supposed to pay. When they pay this principal amount, the interest amount you can see there, 118, 147, 513, it will be automatically given as amnesty. So you're supposed to now do a payment plan for the periods, for the principal amount. So when you select, so the total principal amount is about $1 million, and then you can do the number of installments. So for now, you have to do it until June 2024. So you're having a few. So the more you push them to the other period, then the less time that you'll be having to pay your taxes. So that's how it's working. So if you have the principal amount, you apply for the tax amnesty that way, and you do a payment plan and you fulfill the payment plan. If you don't have the principal amounts, you have the penalties and interest only, you do the 1 shilling, the process of the 1 shilling that I told you, and then it will automatically be removed. If you have payments that you had done in the previous period, payments that were not incorporated in ITAX, so you have the receipts, you can go to KRA and request for reconciliation. And at this point, they are really willing to do the reconciliation. If your company is under audit, so you are under audit, whether it is audit at the station level, whether it's at the objection level, at the tribunal, or at the ADR, this is a period to push them to complete the audit. The moment they complete the audit and they tell you that you're supposed to pay 3 million, they can impose that amount in the system and you can apply for payment plan. So remember, if you've been undergoing an audit this year and it was not completed, and you're just saying, let's see what happens, it's very important for you to seek closure, so that when you seek closure, you can now apply for the amnesty. So even at that particular point, you'll still be given the amnesty of penalties and interest. So the other thing that KRA stated is that if they give you the amnesty, the payment plan, and you don't fulfill the payment plan, they will go ahead and do enforcement. So enforcement is issuing an agency notice to close your bank account. So they have been really aggressive in doing the agency notices to the bank account, to your suppliers, to your customers. They send those letters and they tell them that they are supposed to receive that money on your behalf. So that is something about the amnesty. And I guess we are coming to a point where I would see questions or Stephen. But I also would mention that there's a lot of data integration when it comes to KRA sharing data with other organizations. So with KPLC, with water, with IFMIS, NTSA, when they go to NTSA, they see the number of commercial vehicles you're having. When they go to KPLC, they see the number of meters you're having. This one can signal if you're having rental houses together with water. I don't know, some of you are doing a contract with the government to supply hotel services to parastatals, and you're paid through IFMIS. So IFMIS also signals that you're paid, and they use that data. E-Citizen, when you open a business, they can also be signaled that you have 10 businesses, you have 5 of them. NHIF, of course, when you do NHIF, NSSF, also the same information is used to monitor the pay as you earn, how you do it. Are you doing NITA? Are you doing housing levy? Because of the data with NHIF and SSF. KEBS, when you do KEBS registration or KEBS certification, you cannot do, they're imagining you're doing certification because you're in business, so they will use that data to understand you. So there's a lot of data integration, and that is something that I've seen KRA investing a lot on softwares, on data, and they are getting a lot of information, especially when it comes to VAT. There's a lot of sharing of information, because remember, I don't know, for us, before we came to use eTIMS, we were using the VAT, and there was something that they did for VAT, we call it VAT auto-assessment, and a lot of assessment happened. This was meaning they said they were matching a sale and a purchase. So if Regina is selling to Stephen, then Stephen, the invoice that I'm having, it should be the same invoice that Stephen is having. So there was a lot of matching inconsistencies. And they said only 20 to 30% of those invoices were able to match. Then there was a lot of data of inconsistencies. We continued doing amendments and so many things that were happening at that particular point. Now that is the root cause of teams coming to be, and later eTIMS coming in. So in future, KRA is hoping that they can be able to auto-populate. Then they have started in January to auto-populate the VAT return. So they want to auto-populate the VAT return and charge VAT. So they can actually charge you VAT without you even doing the filing, the actual filing. So that is the level that they want to integrate data to that level. So VAT agency appointment, this happens every time. So when you are appointed, you have to understand the whole process of appointment. Then transfer of companies from the station level to medium taxpayers office to large taxpayers office. Here is structured in levels. When the business is very low, or when you're starting your business, you are at your previous station level. But when your business start to grow to a certain level, they will transfer you to medium taxpayers office and later to the large taxpayers office. And the more your business grows, the more visible you become. So some clients tell me, why is KRA always auditing me? Mostly is on visibility, and especially visibility when it comes to the terms of growth, turnovers, and also visibility when it comes to how social media networks you're having, the multiple businesses you're having, but mostly the visibility when it comes to the turnovers that you're doing. NHIF, this was also has been changed to the rate of 2.7% of your monthly, of the gross monthly salary. It has also been a hot debate, but it has been endorsed. There are some companies that have started doing the 2.75%. So when I was preparing this, I felt I should mention something when it comes to next year. So some proposed changes is to increase the VAT from 16% to 18%. Of course, they say the East Africa countries are at 18%. So if eTIMS come to be, then every company should be on eTIMS. Then there is a pre-filing of VAT. Then the VAT is at 18%. The cost of living, as Stephen has mentioned, or cost of doing business will also be extremely high. So they also Treasury want to eliminate some of the reliefs when it comes to pay as you. And there are some reliefs when it comes to personal relief, that is 2,400. There's insurance relief, mortgages relief. I don't know in particular which one they are targeting, but that is there, making sure that we'll be paying much, much more. Then there is the zero rating of some supply of goods. And this is affecting the hotel industry, mostly the food stuff that we eat, maize flour, cooking gas, all the breads. Some of these things are either zero rated or exempt. So they want to do 16% of them so that to increase, of course, the taxes. The other portion is the revival of minimum tax for loss-making companies. This was introduced like 3 years ago. Then there was some court cases and just went. So they want to say if your company is not making profit, so if it is not paying corporation tax, then there should be a minimum tax that you should pay. So this is also another thing to note is that withholding tax on the agricultural produce. So if a farmer is doing farming, and I know some of you buy those agricultural products because that's what we eat in the hotel industries. When it comes to eggs, mostly the target is milk, eggs. If you supply in cooperative or any organized group, if they're going to do 5%. So this means that if that farmer is coming to sell in your hotel, before you pay them, you do 5% withholding, the same way you do for professional services. Of course, very, very expensive, but those are some of the proposed changes. So what can I say when it comes to the effects of the Finance Act, the trends, the tax trends that are happening? What can I mention in relation to the tourism industry? That there is a push for tax compliance. Everything revolves about tax compliance. The government say that our organization are 50% tax compliance. I don't know if that is correct, depending on your company or where you're in, but that was the assessment. And the government say that they are going to push compliance to 90%. So there will be a lot of tax audits. So are you ready for that as an organization to go through that process of audit? Because that is the next level. So after all these things settles, there will be a lot of tax compliances to organizations to make sure that we are tax compliant. Tax compliance, surveillance, main focus, e-teams, rentals, TOT, and registration. I've mentioned that the surveillance that is happening is targeting e-teams compliance, rentals. A lot of surveillance on the rentals. They are just coming. The tax surveillance is just moving to the rentals. TOT, turnover tax, for the small businesses, a really huge target. And then registration, whether it's pay as you earn, just registrations to companies. Also, the move to clean up the iTax ledger issues, I've talked about that, and this is the time to clear. So if you have those ledger issues and they have never been solved, if you don't solve from now till June 2024, then you'll be required to pay all those taxes that will be left on your ledgers. So the other portion is that KRA is using a lot of data intelligence for tax compliance. You've seen data. I think more than ever, KRA has invested in data intelligence. They have the software, they have the what do we call them? Data auditors, software auditors. Things that I had never seen before, that they are coming with auditors who have the knowledge of data. So they come to your organization and they tell you, we want to have your server. And someone sits there to just extract information. So a lot of that line. So when it comes to the future of you who is employed, there's a lot of taxes. When we consider the addition 32.5%, 35%, the housing levy, the addition 2.75 for NHIF, it is said that that small salary is being taxed so many times. And of course, you see now they are saying they want to also remove a few of relief. So as you as an employer is now being able to understand, how do I survive the season? As an employee, how do I survive the season with my salary and my family and the things that I should be able to do? Do I need an extra income? Can I do something extra to make sure that everything is working out? So especially for high income earners, I think the target is on you. So it's something to really take a focus on. So with that, I guess I can invite Stephen to conclude if we had not concluded on what he had said. And then after that, we can ask questions. I think you can ask questions on the chat. And then we can, or you can, Mr. Kibe, over to you.
Thank you very much, Regina. That is impeccable. And I don't want to hijack the moderation. I don't know whether Chegusi in a position to continue, probably to moderate the question and answer. I know members, have tons and tons of questions, including myself. Thank you very much.
Thank you very much, Mr. Kibe. I think this training has been very educative. I want to thank our trainers, Mr. Stephen Otieno and Madam Regina Kingori. I think members will have questions, but maybe first of all, we finish with Stephen, and then we can pick up from there. Thank you.
Okay, I hope you can hear me. Oh, I want to first receive my apologies. I'm not sure where I lost you or you lost me, but I'm told that it is on this slide. And Regina has covered so many things that are important. And I wouldn't like to go to tax again. I just want to now put it together with the tourism aspect. So this is the last slide. I'm told that the one that you can see on your screen, overall impacts of the Finance Act on tourism, hospitality, and travel business and professionals. You can see it, right?
Yes.
Yes, affirmative.
Okay, so first, it's just 3 slides, and then you ask the questions. Meanwhile, I think people may start maybe posting their questions on the comment section. It's just 3 slides. So the overall impacts of the Finance Act. First, what I saw is that the high cost of doing business, and this is just not for the tourism industry. This is even for the for even other businesses, and this one in terms of the most taxes introduced and some that are maybe increased. Of course, the Finance Act also has reduced some taxes. So you should just learn how to manage your taxes, know where to take advantage, where to avoid, and just how to play your game. And the high cost of doing business may affect business startups and even the running businesses currently for the tourism industry. And then there is reduced revenue for hotels and other tourism infrastructure. The revenue, in terms of, when taxes increase, of course, your revenues may go down because of the increase in the tax expense. But the government wants to increase its tax base. So everything is important. Every stakeholder has their interest, and it all depends on how you make decisions. Another impact is possible decline or minimal increase in domestic and international tourists. You see, most Kenyans or residents in Kenya look at tourism services as luxury in most cases. So if the cost of living rises, and this one is due to increasing taxes, on various products. Some are not even in the Finance Act, but increase in the cost of living may discourage people from undertaking tourism, travel, and hospitality activities. There was an analysis by TIFA yesterday, and they were saying so many Kenyans are looking into ways that they can cut costs. And if you're going to cut costs, then it means they may not consider tourism, and that may impact the industry. Another impact is robust tax system will hurt competition in the industry. I was talking about economies of scale. Economies of scale is a commerce or economic concept that businesses that make large businesses that have a large capital base have the advantage of making more profits, even if they make smaller profits per transaction. If they have many of those transactions, they make more profit. But small businesses may not enjoy this advantage if they have fewer customers. They may not be able to control prices in the industry. They may not reduce their prices, maybe to attract clients. So this may affect competition and to the advantage of the large, for the large businesses, and maybe SMEs may also benefit, but small businesses, SMEs are somewhere in the middle. They may benefit or not, depending on their capital base. And then the act may also hinder the ease of tourism, travel, and hospitality business startups. Starting a tourism company right now may be a challenge. And I'm talking about tourism, travel, and hospitality. I was defining them as THT. So starting a bit, this may be a challenge because maybe there's someone who thinks of starting this business. It's due to tax, and I'm not saying it's impossible. It's possible, just that you need to consider, look at your capital and consider all the new tax regulations that are introduced. That's all I noted under impact. And then what's the future? The tourism market focusing, subject to the Finance Act 2023. So this graph is from a website called Statista. It's a reliable statistics website. And it shows monthly number of international visitor arrivals in Kenya from January 2019 to July 2023. Yeah, so going by the trend, the number of tourists coming to Kenya generally is rising. It's an upward trajectory, as you can see. The worst being 2020 due to COVID-19. The industry is recovering speedily, but we've not got to the level that we were in 2019 in terms of arrivals of visitors. But this one is just up to July 2023. Regardless of the Finance Act, I believe that the increase is going to continue. The number of arrivals is going to increase in the near future. Yeah. The recommendations that I'm making based on all the Finance Act that we've presented is first, the THT entrepreneur should consult more with the tax and finance experts like Regina here in their decision making. So making your financial decisions, auditing, just generally you can consult with the finance and tax experts, and this will help you in making your decisions. There's also another recommendation is observe all the relevant regulations for the industry in starting and running THT businesses. So these are tax regulations, the new tax regulations that are introduced in the Finance Act, and many others. If you want to run your business smoothly, you never run away from regulations. You have to abide by them to make it easier for you. Another recommendation is to find and utilize relevant information in the THT sector for prudent decision making. Information is important. What we actually doing here is sharing information with you. This information is important for any investor who may want to use it. And getting new information doesn't end here. You may continue getting, even from the internet, there is a lot of information from reliable websites, of course. So such information may help you in your decision making. Also, we recommend raising concerns through associations for lobbying with the government where there is need. You see, most tour companies travel and hotels are in particular associations. There's even an association for hotels, association for travel agents, for tour operators. If you join these associations, you can be able to raise your issues collectively, such that you're not one company and you're talking about tax. No one will hear you. But if you enter associations and work with lobbying companies like KTF, where I work, it's sometimes it's easier for you to raise your issues regarding finances and any other concerns. Also consider tax avoidance. So tax avoidance is legal as opposed to tax evasion. Tax evasion is not legal. So tax avoidance is a prudent way of managing expenses, would give you a prudent way of managing expenses and maximizing revenue. So when you work with tax experts like Regina, they would tell you how you can avoid tax and what you can avoid and what you cannot avoid. Avoiding tax, I repeat and I, I emphasize that it is legal. Tax evasion is not illegal. Don't evade tax. That is illegal and not advisable. But you can check on how you can avoid tax. This is not something that you just wake up and make a decision. You consult and to know where you can avoid it, so that you maximize your revenue and you ease the process of running your business. Yeah, that's all. Thank you.
Oh, wonderful. Thank you so much. I want to open the floor. It's exactly, we know we have exactly 51 minutes. And I can see a lot of comments in the comment section, in the chat section. And I just want to see whether there are questions there. And members, if you're probably not in a position to ask a question verbally, I encourage you to ask it in the chat. I'll be able to read it. And just to how we can be able to moderate. If you want to answer or rather to ask a question, kindly lift your hand. I'll be able to see it and then give you a chance. And to open the floor, I have a question myself. I would like to ask either Stephen or Regina, whether, from where you sit, it's, is it still profitable to invest in hospitality and tourism? And secondly, and I don't know whether you did touch this in your presentation, when we talk of compliance, is there any benefit of you being compliant as a business, other than playing cat and mouse games? Would you encourage any professional who is is our profession, is a TPA member, to remain compliant, or to probably play games with KRA? What would you think is the best thing to do, as and also what do you think is the most strategic thing to do? So those are my two questions. I also have a question from Pauline Dumbi. Pauline Dumbi asked, what mitigation measures would you possibly suggest, especially for hotels, to overcome the tax crisis in a sustainable way? Maybe you can take those three in whatever format, and then we can continue with the others. Thank you. Regina or Stephen, in any order.
Okay, I can take the last question. I had the last question well, and that's what I want to answer, which is the mitigation measures that can be taken by mostly hotels. But I'll just talk for the industry, or THT, tourism, hospitality, and travel. Mitigation measures, just like I said, I would encourage tax avoidance where it is avoidable. And this one you have to do by consulting with a tax expert. You don't just say, I want to avoid tax, now I'm not paying a housing levy. That's not how it works. Tax avoidance means you may check on some taxes that you can avoid, or what you can reduce. I mean, how you can reduce your tax remittance in a way. But it's good when you consult with your tax expert. And also the human capital. This one is sad, but it's a reality. that since the Finance Act was introduced, I'm not saying people have lost their jobs because of the Finance Act. I'm not so sure. But the thing is, businesses complaining of the high cost of doing business, they have been kind of doing away with some employees, which is it may be unfavorable for the employees but favorable for the businesses. So they are doing this looking at the redundant positions. You see, they are looking at positions that maybe the company may run without those particular positions, and then they kind of what is the best term to use, not to fire, is they cut down the number of employees, lay off the number of employees, and lay off employees, which is quite sad. But for business, it may be a good decision that may have them on reducing the amount of tax that they pay. And this one may they reduce tax in terms of maybe the housing levy. They want to have to pay 1.5% for more employees. For example, a company that lays off 10 employees may earning maybe over 50 or 100,000. It means that they will really cut their tax burden to some significant extent. Thank you.
Thank you so much. Very informative response. Regina, do you have any comment on whether hospitality and tourism businesses are still profitable? And from an advisory role, would still encourage professionals to invest in such?
Thank you so much for the question. The hospitality industry is very, very much profitable. And for me, I would think there are so many ways that you can try to cut on your cost. First, when it comes to tax compliance, I think the cat and mouse game is over, especially the part that there are now tax service assistants that are working in our neighborhood to see what kind of business that you're doing. Previously, because they were not there are people who could survive without the knowledge of taxes and the knowledge of paying taxes. But right now, there is a lot of issues when it comes to that. Also, the integration of data is also important. And also for your business, when it is very, very low and you're doing low sales, you can do the cat and mouse. But because we all aspire to grow, when your revenue starts to grow, you can no longer be able to do that. So having the right tax knowledge is very, very important. Bookkeeping, this is one of the tax saving strategies that you can do. And when I come to visit most clients, I find record keeping is a challenge. And this is one of the issues that when a tax audit is happening, you don't have documentation. So understanding what kind of document you should have. Some of you are paying with M-Pesa, you don't have receipts. You have so many employees, you don't record them, they come, you pay cash flows by M-Pesa, you don't have recording. You buy stuff from the market, you go to the market, buy your items, you don't have records. So record keeping is one of the key items for you to be able to save on your taxes. Do you have an accounting system, an accounting software that is easy to use and you can be able to use? So, and also having the tax advisor, the tax advisor who is very, very effective is also very, very important. The other thing I would say, just be compliant. You can push yourself to be compliant in a small way as you grow. So pushing yourself, making sure that your business is compliant is very, very important. The other portion that you're asking, can you still do the hotel industry and become profitable? Very, very important. First is the uniqueness of the business that you're having. What is that thing that is unique about your company or your hotel that will make people come? At this point, I've seen businesses, or if I go to the hotel side, if you're having a hotel in the CPD somewhere, there's a lot of people, so you're having a lot of sales. That is coming up so well. If you have a space where there are rooms, so rooms, they're also coming up so well. There's Airbnb is also coming up so well, and people are able to make money on that. So how you set up, how you do it unique way, whether it's travel industry, people are still traveling. So it is the niche that you, so it's the niche that you're having that can make your business. So I would mention that. Then there are some tax saving strategies that are there. So I think in the future we can talk about that. You always have a lot of debtors. So bad debts is something that you can use to lower your taxes. So there's a way that you can structure your business that you pay minimum taxes and you become tax compliant.
Wow, thank you so much. Very elaborate. I have one question from Ivy Mutiso, who is asking whether, whether all these things that we are seeing are new, or they are actually enforcement. They were existing, but the government has decided to enforce them. Especially, what you mentioned, that KRA officers might come to your business and request for your hard drive and where you store your data. Yeah, are they new, or they were existing, only that we didn't know about them?
So this was existing. I think since the government, the Kenya Kwanza government came in and they insisted on taxes became a hot debate. So some of these things were there, but they have really stressed, especially the use of e-teams, the use of data analysis. They were there, but they were not so much enforced like the way we've seen them this time. Of course, for them to send the software engineers, you have to be having a lot of turnover. So this is something that I've experienced with customers who do distributorship, something like supermarkets that I have chains of supermarkets. Those are the people that have run out of data that they'll send the data analyst. But the e-teams use is something that is changing how we're doing taxes in a very unique way.
Oh, perfect. Members, this is really informative, and I wanted to know whether there is anyone who wanted to probably ask a question verbally. I can give you a chance to unmute and ask the question.
Also, I see Grace has answered, which is very good, especially for employees. The NHIF has gone up, pay has gone up, the housing levy. Yeah, so there are a lot of increases also for taxes.
Oh, yeah. I'm just holding in so that I see whether there is any other question. Yes, Mariana is asking, yeah, you might probably want to elaborate more on the taxes for items bought from the local market, where the traders are less formal, probably not tax compliant, do not have receipts, and such kind of thing. And I think in the hotel industry, we are prone to that because we buy vegetables, grocery from informal markets. Thank you.
Thank you for that. Very important. So previously, this was the advice I would give you. When you go to the market, when you buy your items, you come to a petty cash. So you say potatoes, 1, 2 gunias, 3,000, you do a petty cash and you sign. That was enough documentation. But now with eTIMS, it's coming to say that even you buying from the market, that is for you to recognize that purchase, it has to be eTIMS compliant. So come January. So I don't know how we shall be able to do that purchases. So I don't know if we're going to go to the market with the people who are eTIMS compliant. But previously, if today you ask me, as long as I come to your company as an auditor and I find those petty cash vouchers signed, for me, that was enough. So also, if you go to the market and you buy potato from somebody who is willing to give you a car receipt, even if it doesn't have a name, but they just say Regina Kingori, I sold you 3 gunias of potato and they signed. That was good enough. But now, with this regulation of eTIMS, is going to change so many things. KRA want to see, can you imagine, they want to see the sales that are happening in Kenya on a daily basis, every single sale. So we're going to see how that, if the people in the market are able to adopt that, or if it is going to be too hard. But there are organizations right now that have given those letters to their suppliers, telling them, come January, will not pay you if you don't have eTIMS. So it is that challenging for such. There are even hotels that have told their suppliers, for us to pay you, especially international hotels, they've already given that order. For you to supply us, you have to be eTIMS compliant.
Thank you so much. Yes, that is extremely eye-opening. Rhoda Mwikari is asking whether, there's a tax that has been introduced to online travel agents and Airbnbs, whether you are aware of that and whether you could talk a bit about how this could change that space of online travel agency, booking.com, hotels.com, and others.
So possibly Stephen can take up that.
Yes.
Okay. About tax that has been introduced to online, I think online, anything online is mostly affected by the digital service tax, and maybe they can check on how they're affected and how they can pay it. I'm not sure about this new tax unless they say the name. And then the Airbnbs are affected by rental income tax, and the owner of the Airbnbs are liable of making sure that this tax is paid, or if there is an agent that is between the owner and the client, they are liable of ensuring that the rental income tax is paid.
Oh, okay. Yeah, Chebus, on the pay bill, the one pay bill that the government has introduced, 2222. Can you elaborate on where this is applicable?
So the pay bill 222, 222 is applicable when you're paying taxes. So when you generate the e-slip, we used to use a different pay bill number before. So right now we are using the 222, and you're supposed to use it to NHIF, NSSN, all the government bodies are now paying under that pay bill. So that was a directive by the government. And at the moment it is in use. Even if you go to, if you go to, I don't know, you're hoteliers, if you go to museum and you're paying through, even if you pay something on eCitizen, you're paying through the same pay bill. If you go to a museum and you have to enter Savo, those places, you're using the same pay bill. So they have centralized the receiving of all payments. Thank you.
Yes, sure. Yeah, Grace is asking, I don't know whether Francis, Steve can take this, the importance of tourism fund, probably the structure and the importance of it to professionals and businesses.
For tourism fund, there is actually an organization that they collect some levies on tourism, for tourism services and so on. But for more information, you can find on their website. But tourism fund collects some levies on tourism services, and they use that fund also to support tourism related activities. Yeah,
Okay.
thank you.
Thank you. Yeah, Grace is, Mariana noting that, we might disadvantage the local communities who will not, or rather will be slow in being compliant and opting for more established businesses. If let's say they are supplying vegetables, potatoes to our hotels. Regina, has the government foreseen this? SMEs being, they will not, like being excluded from the commercial space because they must be compliant for them to supply a hotel or any other establishment.
Okay, what I can say is that there's a lot of disadvantage. And I think this is something that we had not seen the advantage that some of these, there was no taxes being imposed in them. But the government has insisted that they have to tax. And this, especially the farmers, will be affected. The local markets, the marikitis, where we buy our items, will be the most people that are going to be affected by this. So for me, I think, I don't know how people can do lobbying, especially because we did lobbying for housing levy and it's still up and running. So I think if we can do a bit of lobbying, we can be able to save the situation, but because of course they'll be really affected. And also I mentioned that the trend for 2024 is that the farmers are going to be taxed 5% withholding taxes. That is a proposal that if they are supplying new eggs, they are supplying new milk, whatever they are supplying, before you pay them, you do withholding. So more taxes are still coming. So I don't know. I think we need association like you and other associations should come up and do a bit of lobbying and talk to the government, because this is an initiative that is going to really affect. And I've said already, some companies in particular, I'm talking about Farmers Choice, telling their farmers, and these are farmers who are doing pigs. And sometimes they just someone will just sell 10 to them in a year. They're telling them, for you to sell us, you have to be ETIMS compliant. So it's a huge challenge.
Okay. I think thank you so much, members. I don't seem to see any other question. I want to imagine, the presentation were extremely elaborate. The TPA Education and Training Committee thought, in its wisdom, that this was a topical issue that we need to continue appraising our members in our continuous development programs. Maybe I can just take this chance to say thank you for, for staying in all through the training. This is the last CPD point, members. If you know, we have we have ran 3 of them, 2 physical and 1 online, to give us, all of us a chance to be able to be compliant. Now that you're talking about compliance in terms of CPD appraising and continuous development within the profession. Yeah, we will get to see the modalities of sharing the slides through the secretariat. Thank you so much for raising that up, and also how to do the recording of this particular training. We are going to discuss about that these modalities with the secretaries and on board. Come next year, the Education and Training Committee has lined up a full program. This has already been effected. We have had meetings where we have done a schedule of CPD sessions throughout the year. And this will be shared with you before the close of the year so that you can organize your life, your calendar, and even your leave days around that. So we have lined up so many fantastic things for you, including conferences. We really want to make to bring back vibrancy in our CPD within the profession, because that is why we are called professionals, because of continuously appraising ourselves. The committee is also very open to ideas, not just within the committee, from all members. If you think there is anything that you think can be is topical and can be of help to members, whether it is digital marketing, data, please feel free to reach out to us. We'll be able to deliberate internally, look for experts such as those that we had today for us to deliver this. Our official email is training@tpa.co.ke. So I don't have so much to say. The other thing is I would like to welcome. I know the board has floated a call for members to join a TPA ETC committee or other committees, various committees. If you are really enthusiastic about training, professional development, in this executive space, kindly express your interest for consideration. Thank you so much. I just want to, with all due respect, and to call Dr. Ray, if you are around, our able chairman, kindly just come and greet our members, and then we can close thereafter. Before we close, I'll be able to ask you to switch on your cameras for a group photo after Dr. Ray has spoken.
Mr. Kibe?
Yes, please.
I'll share the slides with you. Many people, I see them asking.
Wonderful. Thank you so much. Anybody who applied and registered, I know we have your emails. The secretaries the secretariat will be able to organize on how you get the information for you to read through. Thank you so much, Regina, for that. Dr. Ray, are you around and can you hear me? Maybe if Dr. Do we have any other board member? Any board member within us? Oh, Dr. Dr. Ray, are you able to talk? Okay. So thank you so much for attending this session. I would just want to, once again, thank everybody, thank our able facilitators to organize this. If you are running event, if you're running a company and you like more tax audit and you like Regina's contacts, we will also gladly share for you to take the conversation offline. Thank you so much. Kindly, if it's possible where you are, switch on your camera for us to do a group photo for our memory, for our reports. and we'll be so glad if you do that. Thank you. Perfect. Just don't go as yet. Please don't go as yet. We take the page 2. Done. Thank you so much. Have a fantastic evening. We continue to do this. Have a Merry Christmas and a Happy New Year. See you next year. We have lined up fantastic things as ETC. Please sign up when we call you on board with these programs, whether physical or virtual. Thank you so much.
Thank you, thank you, thank you. Have a wonderful evening, everyone.
Thank you. Merry
Thank you.
Christmas too.
Thank you. Bye bye.
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 Thank you.
Please.
Thank you.
Bye.
So in Tia's, these are my contacts on the chat. In case there's any other member who would like to speak to the ETC through the chair, those are my contacts. I'll also leave the email for you to continue giving us suggestions on the directions that we can take.